Okay, hi everyone, welcome to today's webinar. Um, for today's session, we are going to be doing our pre-market live analysis. We're going to give about 2 more minutes to let more people join our session before we get started. So in the meantime, feel free to let me know in the chat if you guys can see me, hear me, and also, most importantly, you can see my screen. And yeah, we'll get started in about 1 more minute. Thanks, everyone. Okay, let's go ahead and get started. So as per usual, a disclaimer and risk warning. Trading forex and CFDs carries a high level of risk. Okay, why is my screen not moving? Just give me 1 second. Mm, okay, I'm not sure why my screen isn't moving. Okay, great. So just a disclaimer and risk warning, trading forex and CFDs carries a high level of risk to your capital, and you should only trade with money that you can afford to lose. Trading forex and CFDs may not be suitable for all investors, so please ensure that you fully understand the risk involved and seek independent advice if necessary. Please read and ensure that you fully understand our risk disclosure. So here's our agenda for today. We'll start off by looking at some analysis on FX majors, followed by commodities, crypto, and indices, and any custom requests. Okay, so I'm Melanie and I'll be your speaker for today. I'm an investment analyst at Rocket, who are finalists for Best FX and Equity Research in the years 2019 to 2021. We specialize in technical analysis with a focus on Fibonacci retracements, extensions, and projections. Okay, now let's go ahead and get started. Okay, so to start off, let's take a look at the events for this coming week. So there are a lot of economic calendars out there, so it's entirely up to you which you choose to use. We just prefer to use forexfactory.com, which is what I have here. So looking at this week's events, which is 16th to 20th, apply settings. Okay, and you can see I have it filtered to only focus on the orange and the red icons. And that's mainly, okay, let me just change my settings. Okay, yes, so that's mainly the medium to high impact events. But if you click on this green icon here, you can actually take a look at the low impact as well, which is the yellow icon, and any non-economic events, which are the gray icon here. So that includes any bank holidays. You also have you can filter out any event types that you're not currently looking at, and any currencies that you're not trading as well. I just prefer to have all of them laid out. So you can see we have a lot more events to cover per week if we are also looking at the low impact events. So that's why we just like to streamline it and just focus on the medium to high impact events. Okay, because these will have the biggest impact on our charts as well. So on Monday, today we have China's industrial production and retail sales data. We also have Eurozone French, German, and Eurozone Flash Manufacturing and Services PMI. We also have UK's Flash Manufacturing and Services PMI. We have US Empire State Manufacturing Index, Flash Manufacturing and Services PMI for the US as well. Okay, and on Tuesday we have Bank of Canada's Gov Macklem speaking, UK's claimant count change, average earnings index, Eurozone German IFO business climate, and German ZEW economic sentiment. We have Canadian CPI, which is inflationary data. So you can see this is a pretty high impact event with the month-on-month data forecasted to come at 0.1%, which is lower from the previous 0.4. We also have US core retail sales data, and on Wednesday we have UK CPI. So once again, inflationary data, which is pretty high impact, as you can see from the red icon. And these are expected to go up to 2.6%, up from a previous 2.3. We also have the US building permits, crude oil inventories, and on Thursday, US federal funds rate, which is expected to drop to 4.5, down from a previous 4.75. We also have the FOMC economic projections and FOMC statement and press conference on Thursday. In Japan, we have the BOJ policy rate, monetary policy statement, and press conference. UK, we have monetary policy summary, and the official bank rate is expected to maintain the same at 4.7%. We also have the US final GDP data in the US, as well as unemployment claims, final GDP price index, Philly Fed manufacturing index, and existing home sales. And lastly, on Friday, we have China's 1 year and a 5 year loan prime rates, UK's retail sales, Canadian retail sales, US core PCE price index, and revised UOM consumer sentiment. So yeah, this is forexfactory.com, but feel free to use any economic calendar you prefer. Okay, now without further ado, let's go ahead and take a look at our charts. Okay, um, let's go ahead and get started by looking at DXY first. Okay, can you guys see my charts? Okay, great. Should be fine. Um, please let me know in the chat if there is any issues with the video or if you guys can't hear me as well. Okay, but let's go ahead and get started. So on our weekly time frame, I like to start off by looking at the higher time frames and then work our way down to our smaller time frames. So on our weekly time frame, you can see prices generally moving upwards recently, although there has been some reversal recently. Now on our daily time frame, okay, we can see that prices are generally moving upwards as well. We have prices moving kind of in this ascending trend line. Okay, so now let's go ahead and add our support and resistance levels. So to start off, I'm just going to place a first support level here. And for my first resistance, I might place it maybe just here. So it's in line with multiple swing highs. Or actually maybe here. Okay, and for my second resistance, because our first resistance is pretty close to where price is currently at, so if price is able to break out of that first resistance, we'll then go in for a buy towards the second resistance. Okay, if not, and it reverses and breaks out of this ascending trend line and also out of this first support, we'll then I'll just add another second support over here. Okay, now going in with our Fibonacci levels to support these horizontal levels. You can see my 50% and my 61.8 line up really nicely with my first and second resistance. Okay. Next I'm also going in with another retracement. Okay, my 23.6 does line up with my first support. But price has already kind of broken out of it, so we can't use that anymore. So instead, I'm just going to be using the 38.2. Okay, in line with my second support. Next, I'm going to go in with a Fibonacci extension. For this method, we are using the levels that are greater than 100%. So you can see here, I have the 127, the 138, as well as the 161.8. And for this method, we are kind of looking for this Nike tick shape. So it looks something like this. If it's inverted, it looks something like that. Okay, and I can see my 127 as well as my 161.8 both line up nicely with my first and second resistance. Next, I'm going in with projections, in which we use this this tool here. Okay, price has already broken out of that level. So I'm not gonna use this. Okay, my 61.8 lines up with my second support, so I will keep that. Okay, so you can see here we have a confluence area about here. Okay, and prices are currently heading towards that level. So let's take a look and see if our indicators are giving us a bullish signal as well. So let's look at our Ichimoku and MACD for starters. I like to start off with these two because at one glance you can tell exactly what the signals are. So Ichimoku, you can see it's giving us a bit of a bearish signal, so that doesn't support our analysis. Ichimoku prices are moving above the cloud, so it is supporting our bullish analysis. Let's maybe take a look at Bollinger Bands. Okay, Bollinger Bands are giving us a bit of a bullish signal as well. Let's look at RSI. Okay, so on our RSI, we also have prices moving upwards. Okay, So that's also a bullish signal. If we look at stochastic, okay, there isn't really a trend line for stochastic, but you can see prices are, or rather our indicator is also giving us a bullish signal here. Okay, let's maybe look at our moving averages. Um, I like to use both the EMA and SMA together. And you can see prices are currently moving above both of these indicators, so that also supports our analysis. Okay, so from this ascending trend line, and all of the indicators that we've looked at, it seems like there should be enough bullish momentum to push price above this confluence area that I've highlighted. But yeah, we might see prices kind of react a little bit in this area here. Okay, simply because it's a confluence area, you can see quite a few Fibonacci lining up in that area, and also the swing highs lining up as well. So price has tested this area before, but currently it looks like there might be enough bullish momentum to push it above. Okay, and if prices are able to break out of this confluence area, then we'll proceed to go in for another buy towards the second resistance. Okay, and that is it for DXY. Any questions? Okay, if not, let's move on and let's look at gold. Oops, let me just save my charts. Um, okay, I'm just gonna save this. Okay, now let's take a look at gold. Okay, so on our weekly time frame, we have prices generally moving upwards as well, but with a recent reversal. So generally, with DXY and gold being inversely correlated, you can kind of use that information to guide your analysis. Um, Although there are certain occasions where they might move in the same direction, like we saw during the US election. So during kind of volatile periods or geopolitical events, we might see prices moving in the same direction. So just be careful of that. But anyway, if you click on this compare symbol, you can actually look at the periods where um prices moved generally in the same direction, or when they were moving in opposite directions, which is helpful sometimes. Okay, so now looking at our daily time frame. Okay, we don't have a trend line here, but I will go ahead and add our support and resistance levels. So my first support will be here. My first resistance up here. Second resistance just at the swing high here. And for my second support, maybe just here. Okay, now going in with our Fibonacci levels once again. I'm starting off with a retracement. You can see my 50 and 61.8 both line up with our levels. My 23.6 lines up nicely as well over here. We might do one more retracement just to be sure. Okay, my 23.6 also lines up with my first support. Okay, so here we already have this pretty big confluence area. Okay, my 61.8 also lines up. The 78. Oh, okay. I'm gonna be keeping I'll just keep all of the levels here. Okay, so for our projection over here, we are looking at this kind of lightning bolt kind of shape. Something like that. Okay, and for this we are looking at the level 61, 78, and 100. Okay, prices already broke out of this 100%, so we can't use this anymore. No. Okay. I think that might be all the levels we have. So when it comes to confluence areas, your Fibonacci levels don't have to line up exactly with these support and resistance levels because we're looking for confluence areas more so than specific levels. And why these confluence areas are important is because prices generally are attracted to such areas of confluence, but they might not be able to break past them. So let's see if our indicators support our bearish analysis here. Okay, currently prices are moving within the cloud, which is a transition kind of phase, so it doesn't really tell us much here. So I'm gonna move that. MACD is giving us a bit of a bullish signal, so that doesn't support our analysis. Let's maybe look at Bollinger Bands. Okay, doesn't tell us much as well. Let's look at moving averages, RSI, and stochastic. Okay, moving averages, prices have recently crossed below both of our indicators, which is a bearish signal here. So that does support our analysis. If we look at RSI, you can kind of see our indicator giving us a bearish signal already. Just want to see if we have a descending trend line maybe. Okay, we kind of have prices moving in this descending trend line as well. Okay, whereas on our stochastic, okay, we have kind of this hidden resistance level, which basically means that every time we've reached these peaks, for example over here, okay, we saw stochastic drop, but we also saw prices continue to drop. And that's happened pretty recently over here once again, where we're seeing prices, or rather our indicator, reverse off this hidden resistance, and we might see that same thing happen as well. Okay, I think here as well, even though it's a little bit less of a drop. Okay. And that's it for gold. And yeah. Okay, just give me 1 second. Next, we'll look at euro dollar, and then dollar franc. Okay, I'm trying to understand why my charts are not saving. But okay, never mind. Let's go ahead and look at euro dollar now. Okay, so on our weekly time frame, prices are generally falling with a slight reversal again, but overall still pretty bearish. So I'm gonna place a first support level at this swing low. Okay, my first resistance may be here, and a second support maybe here. Okay, so now let's look at our daily, or rather 4-hour time frame. Okay, we have I'm just gonna maintain, I'm just gonna keep the levels that I used earlier on our daily time frame. Okay, and now I'm using a Fibonacci retracement. Okay, our 50% lines up. Yep, we can look at Euro Yen after this as well. Okay, and for my projection, I think this 100%, yeah, it lines up with our first resistance as well. So I'm going to keep that. Once again, I'm using this kind of zigzag method or flash kind of symbol. Oh wait, actually, because price has already broken out of it here, we can't use this anymore. Okay, here you can see the 138 lines up nicely. Okay, I'm actually going to take this shape instead. So this is the Nike tick shape that we talked about earlier as well. So the 161 lines up, the 138 also. Okay, I'm not using this because price has already broken out of it here. So I'm just going to keep the 168, 161.8. Okay, 100% lines up with our second support. Mm, my 50% also lines up. This is our retracement. So that also lines up with this second support level here. Okay, this is a pretty big confluence area. We have a few, should be green. We have a few swing lows and swing highs that respect that area. We also have about 3 Fibonacci levels that line up there. Okay, now looking at our indicators to see if they support our analysis. Okay, we have prices moving below the cloud, which supports our bearish analysis. We also have MACD giving us quite a strong bearish momentum there. Now looking at some other indicators, let's look at Bollinger Bands, RSI, stochastic. Okay, you can see prices pushing below. Let me zoom in. Okay, pushing below that lower band on our Bollinger Band, so that also supports our analysis. Okay, Here, RSI and stochastic aren't telling us much, so I'm going to remove that. And let's maybe take a look at our moving averages as well. Okay, so actually here prices recently moved above both of the indicators, so that doesn't support our analysis. Okay, so here we see prices recently kind of rebounded off our first support, but it looks like prices are continuing to drop here. So if prices are able to break out of our first support, then we're going for a sell towards this major confluence area here at our second support. Okay. Okay. So that's for euro dollar. We have a request for euro yen as well. So we'll take a look at that. Any questions for now? Okay, next let's go ahead and look at euro yen. Okay, so on our weekly time frame, prices generally moving upwards with a recent reversal here. Okay, on our daily time frame looks pretty okay. We don't really have a ascending trend line here. Okay, on our 4-hour time frame, you can kind of see prices moving um upwards a little bit. Okay, no trend lines or trend channels here. But we'll just follow the overall trend for now. So now let's go in with our Fibonacci levels, or rather our support and resistance levels, I mean. So this will be my first support. First resistance, second resistance, and my second support just at this swing low. Okay, now going in with our Fibonacci levels again. 78 and 50% both line up. Okay, my 61.8 lines up with my second resistance as well. 61.8 lines, excuse me, lines up nicely with our first support. Let's see if we have any other levels. Okay, I don't think so. So here we're expecting prices to break out of our first resistance and continue moving towards our second resistance. Okay, we kind of have prices moving in this ascending trend line as well. Okay, now let's look at our indicators. Again, I'm starting off with Ichimoku and MACD. Looking at the cloud for Ichimoku, you can see prices moving above the cloud, so that's giving us a bullish signal. MACD, you can see, is also giving us a bullish signal. Now if we look at maybe Bollinger Bands and RSI stochastic, okay, you can see prices pushing above the upper band over here. Okay, so that's also giving us quite a strong bullish signal. Okay, on our stochastic, we also see prices moving in an ascending trend line. And on our RSI, it's not really a trend line, but you can see prices moving upwards in kind of into the oversold regions, actually. Yeah. Overbought, I mean. Okay, so next, I just want to check the moving averages. So I use both EMA and SMA, and you can see prices really moving above both of those indicators as well. So that also supports our analysis. Okay. Are there any other requests? Yep, no worries. Okay, let's look at one more chart. Let's look at our dollar franc. Okay, so on our weekly time frame, again, you have prices generally moving upwards recently. On our daily time frame as well, okay, so for my first support and my first resistance, okay, I'll just place it here for now. And for my first support, or rather my second support, over here. Okay, so this is if you are looking at the daily time frame, but let's go ahead and look at our 4-hour instead. Okay, so here my first resistance will be up there, first support over here, and second support here. Second support there, and first resistance maybe up here. Okay, maybe here instead. Okay, now going in with our Fibonacci levels again. $78 lines up, so I'll just keep that. Okay, my 61 lines up with my first resistance. Okay, 78 as well. Oops, no, just the 61. Yeah, just the 61. Okay, looking at our retracements over here. My 23 lines up. Oh wait, okay, but price is already broken out of that, so we can't use that anymore. I think that's all the levels we have for here. So now looking at our Ichimoku and MACD again, you can see on our MACD, prices are giving us a bullish signal. On our Ichimoku, prices moving above the cloud, so that's also a bullish signal. Let's maybe look at Bollinger Bands, RSI and Stochastic. Okay, Bollinger Bands, prices are pushing above that upper band, so that's also a good sign. Supports our analysis. Stochastic and RSI, prices generally moving upwards as well. Stochastic you can see is kind of in the oversold region, and it looks like it's U-turning, so that doesn't support our analysis. So I'm removing that. We might see a bit of resistance in our first resistance, which is where prices are currently testing right now. Simply because price has tested this level before, and it's also a pretty significant level here, along with that 61.8 projection level. Okay, so you might see a bit of resistance, but it seems like there might be enough bullish momentum to push it upwards. Okay. Okay. Any questions? I think that's all the time we have for today. So thank you guys so much for joining and requesting for charts. I hope you guys found this helpful. Have a great rest of your week, and I will see you guys again next week. Thanks, everyone. Bye. Thanks, guys. See you guys next week. Bye, everyone.